Hello guys, hope I am on time right now. So as usual, we try to wait for a few minutes until the guy comes, and then we can begin to speak to for our subject for today, which is how to spot opportunities. And we have spoken many times about this kind of things, but each time I try to give you another information. Hi Donna, how are you? Nice to meet you today. So opportunities are daily. I know some people, they don't believe, but in the market it gives daily opportunities, because the stocks, each day in the market we have stocks that move good and reach my criteria. Okay, this is the most important thing. Now for me, I don't have only one strategy. You should understand that when the market is down, or when the market is going up, or when the market is into a bull, each strategy has its own characteristics. Okay, but going long, when you follow the stock, most of my techniques are the same, because these techniques apply on all the stocks in the market. Okay, although there are some stocks that are very volatile, some are not very volatile, these techniques gives you solutions to understand how the stock moves. Now when you begin to trade, you are always scared to stay longer, and this is a real problem. Now how do you get rid of this real problem? Is to follow the rules and instructions, and then after that you get rid of this feeling that the market is going after you. It means it is against you always. No, the market is not against you always. Sometimes the market is with you, okay, and you are with the market. But the problem is that you are so scared that you exit the trade without any reason. It's just because you are scared. Okay, so this feeling of being scared is a weakness in the beginners as traders. It means when you begin trading for 1 month, 6 months, 1 year, 2 years, I tell you that this is a beginning stage. You feel that you are scared, and you feel that any movement in the stock market or in the stock is something good or bad to you. Okay, which is not. So Duna asks the question, what is the lowest price a new trader should pay for a stock? Now you are free. You are free to buy whatever stock you like. So there is no rule for that. But understand that the more the stock is very, very small, like penny stocks and under, the risk is more. That's it. The risk, what does it mean, the risk? It means you can make money, a lot of money, or you can lose a lot of money. This is what I mean by risk. Now for us as a swing trader, or traders who are following the trends, we should control our risk. If I am going to a trade where I risk 50%, I will never do that. Understand that 50%, you are not putting, for example, $100, $200, and you say, oh, it's $200. If I risk $100, you think it's $100. But what if someone put $100,000 or $200,000 in a stock? Do you think that someone is stupid to put $200,000, and then there is something wrong, a big risk, and then he lost or he loses 100,000 in 1 day or two? Do you think this is logical? It is not logical, because the primary thing you should always think about is not to make money. First is to control your risk, to control your money. It means try to preserve your money. This is the first thing you look at. You don't think on how much you make, because how much you make you will never know. Okay? But if the market wants to take your money, you should know how much it will take, because you decide, not the market. Let's say you buy a stock at $20. Okay? If you don't put stop loss and you have no idea when to exit, this is a real problem. Because if the market is against you and the stock is going from $20, it's going to 19, 18, 17, 15, 13, and you stay, and the market is taking whatever he wants from your money. Now, when you understand, when the market takes a lot of money, this is called, in the jargon of trading, a big loss. A big loss, you can't continue trading with big losses. Okay? You can't do that, because your career will end soon. You will, few weeks, few days, a few months, at least 1 year, and then you stop trading. It's just because you are doing so risky trades. Sometimes you don't know these risks. You don't know what you are doing. You leave everything. If I say you have a shop, and in the morning you open the doors and you leave it alone, there is no managers, there is no cashiers, there is no one there. Do you think that the people, when they enter, they behave normally? No. They will begin to steal everything they see, because there is no one who is looking after them. There is no manager, there is no security, there is no camera, there is nothing. That's why whenever you go to a store, you find someone who is looking after. And this is business, because it is business. You also, when you buy whatever shares from the market, any stock, you should think, if the market is against you, where you exit before even you buy the stock. And this is called to plan for the trade. Okay? As you plan for the future, as you plan, for example, you want to be to do some kind of job. It needs that you go to university or college, and you should have some degree. This is the minimum you can do in order to get that job. Okay? So in trading, it is the same. Before you do the trade, you should search for stocks, select the best one, and then see how many shares you can buy, and then you put stop loss in order to control your stock and how much you lose. This is the first steps that any trader should do in a trade. If you just trade at random, this would not be something possible in trading, because it's like business. Hello, Islam A, how are you? So we are just beginning, and please, if you have questions, since we are doing a broad subject today for opportunities, thank you very much, Islam. How are you? So we just begin the session, so you have time to ask questions, or if you have something to tell, it's very good. So, when I say the profits are never in swing trading, okay? I'm not speaking about day trading, because in day trading, you have a limited time. So you can target. For example, you say, you buy a stock at 9:30 or 9:50. The stock is doing good. Let's say you have some money. Hello, Chris de Guzman. How are you? And let's say you make $1. It means if you have bought 100 shares, you have got $100. And at that time, you should think about a target. This is in day trading. You say to yourself, this stock is always making $1, $1.50, $1 or 80 cents. So this is the average. So I will exit if I reach that amount of money. Now for me, if I am doing day trading, I will make the exit point, but I will never exit by just exit like this. I let the stock goes down to where I put my exit point. So even in day trading, I don't usually exit because I want to exit. Okay, most of the time there should be a reason. Now, hello Islam. You say good morning, Chris from Australia. How are you, Chris? I like Australia. I like the gold nuggets that are in the south. I should go one day. Oh, I should go one time there in order to find gold there. I see a lot of videos. I like it too much. Hope Islam, you are there near where is this gold. I'm coming to you. That's a good place to use a metal detector and to find gold. This is very good. I like this kind of thing. Chris de Guzman say, let's plan that in the future. Yes, it's very good because it will be a good plan. Because where you go, you know the place. The thing that you need to do is just search. And everybody who has patience, if you have patience to do something and you love it, you will make money from it. That's a fact of everyone who is following something. If you follow something, you are serious, you will succeed no matter what. Okay? Because the ability to stay longer, and you have patience for that, you forget about the money, because the money comes when you understand these things. Now, a lot of people, they want to make money, but they don't want to understand the market. They want just, okay, where is the good stock? Give me the stock, I buy it, and then tell me when I exit, and then I make money. This is not something that you can do in life. And a lot of people, they want this. They don't want to think. They don't want to plan for a trade. They don't want to do something. They want just to show them something as if you know the future. And this is a problem. Chris de Guzman say, can I go to? Yes. Australia, I think you just have a ticket and you go there. Okay, there should be someone like Islam A who knows maybe the place. Okay, you know where the desert, and you give they give you a permit, and then you go and you search for these nuggets. I like it too much because that's a very good thing. Islam A say, I want to work hard and be the 10%. Now, in trading, you should not work hard. You should be smart. It means there are things you should learn, you practice, you understand, and the money can come later when you understand these things. It's not a very hard. It's just to understand things and to stop having feelings in your trade. That's I just have someone who is my student. He just begin to trade. Okay, 1 day, 2 days, he just begin to see the money. $100, $200, $300, and then he exits. And he sent me his trade, and I asked him the question. Okay, you buy on the criteria, you choose a good stock, you bought it, you put stop loss, the stock is going up, you make some money. Why you exit? He told me, I am scared. That's the thing I am speaking always, and I'm trying to make people understand why you are scared. He said to me, because in that day, the stock is going good, I make a lot of money, and then the stock begin to go down at the end of the day. And I say, and then? He told me, I exit. I say, why you exit? Swing trading, it is not to see the day fluctuation. It means you should not see the day in the morning, in the afternoon, at noon, at 10 o'clock, and you begin to watch by minutes, by 10 minutes, and then you are at work, you watch. This is not a swing trading. You are confusing yourself. You put too much stress on yourself. Okay? This is just because you are scared. Now, in order not to be scared, you should be disciplined, and this will take time. You should follow the rules. Never exit a trade without a reason. The reason, I give it to you. It means I give you instructions, and I give you why you exit. This is done before you exit. You have what we call exit point. It means if the stock reaches that point, you exit. And then you should follow this stock if this stock doesn't go up again. Because this is the whole strategy. It means you should learn. There are things that you should do always, but you do it only once in a day. Okay? It means you are not required to be in the market 6 hours or 7 hours, from 9:30 to 4. You are not required to be 7 hours and a half looking at the price. And now we have the cell phone. It means some people, each minute they see where is their stock. This is a stupid thing. You are just making hard for yourself. Swing trading is no stress trading. It means you should not be stressed. You should not stress yourself to look at the price each minute. That's why it is called swing trading. You see by the day. You don't see by the minute, or by 10 minutes or 15 minutes. So, although this student, he just began to use my criteria, he began to see the money, but he exit early. So for him, I told him, you should begin to see training level 7 and training level 6. Training level 6 is how to put stop loss and how to exit. And training level 7 is to know how to follow the stock. You should never exit when the stock is giving you money daily. We are not looking at the market to give you money in 1 hour or 2 hours or 3 hours. No, we try to see what the market gave you in 1 day. Don't be scared. Look at the end of the day. Let's say 3:30. You open your account and you see what's going on. That's it. You don't take decisions right away. You should see what's going on first. But this guy was looking in the morning. The stock is going good. Let's say it goes $2 in that day. And then in the end of the day, the stock has lost $1. Now he thinks that this $1 is a loss. Okay? It is not a loss. It is just what the day has given you. So the market, sometimes it is generous, sometimes it is not generous. So you can't oblige the market to give you more than what it decides to give you. Islam said, I don't know enough about Australia, it's too large. No, I will show you. I will show you, Islam. I will show you the place where we have gold and where the people are searching. And if you are living there, let me know. I can come to you and we can go and find some nuggets. Maybe we find a big nugget, and then we buy the whole market. Okay, big market like this, like 10 pounds or 20 pounds or 100 pounds, and then we sell it and we buy the stock market of Australia, and we become very rich just once. So this is about, as they say, about Australia, which is very funny. Okay, let's see here. Good morning, sir. Ginanu Shirias. I don't know from if I pronounce the word good. It looks, I didn't see you again, so welcome, Shireyas. He said, how to choose good stocks. Now, Ginanu, I have a training levels. It means you should take a training in order to get to know what I am explaining. So here, as you can see, I am giving you the general guidelines of my strategies. Now, here is my website written at the end of this chat. You look at it, Djellala.net. Now, you can go and you can take your first training. Okay? Training level 1 is for free. Okay? Just go to it later and watch it. Now it gives you the general ideas about how my strategies are working. Okay? This is one thing. Then, either you can begin, since you have studied training level 1, you begin with training level 2, level 3, level 4, until you go until 10, which is the basics. Or you can you can do the golden subscription. Okay? The golden subscription. And you see the golden subscription and you get 13 training for free, which are the basics. Okay? So my training, the only training, level training that it is free is the first one. And then you study, and then if you have questions, you ask me. most of the time, most of the people, they don't have questions because it is so simple and so clear. But even if you have questions, you can ask. Okay, so Gnano, this is trading that it is simple, easy, based on prices. It doesn't depend on the news or to check the company or to check whatsoever. You use a stock screener, you find stocks. I will give you criteria how to choose. You buy one, you put stop loss, and you leave it. It's so simple thing. And each step I will explain, and by videos, explanation, I give you examples. It's all about trading. Island said, I live in Melbourne. Okay, I don't know where, but it is in the south, in the desert. And I know Australia, it has one of the biggest desert in the world. So we will see that. Okay, so as I told you, strategies are different because a lot of people they think it's only one strategy that you can do the market. No, it is many strategies according to where the market is for that stock, because there is a stock that it is going up for a long time. There is a stock which is going down for a long time, which is downtrend. So in each situation, you have appropriate strategy that lets you know how to choose a stock. And it is all based on what you call technical analysis. But for me, I am not really using technical analysis with indicators, moving averages. I don't use them. Okay? A lot of people, they like indicators, they like moving averages. For me, I don't use them. That's why I don't teach them. A lot of people, they ask me, why you don't use that? Why you don't use that? I don't use it because for me, it is useless. Useless, it means I don't use it. It's a lagging information. It doesn't tell me the future. And for me, I am not really looking to predict anything. When I buy a stock, okay, I don't say it will go up or it will go down. So the main thing I am doing is applying my criteria. And if I am right, tomorrow I will be making my money. If I am wrong, the next day I will be losing little money. So I understand that the market tells me you are wrong. You should accept that. Okay? So the market is always neutral, but it always tells you what to do. Okay? It tells you what to do if you understand the language of the market. The language of the market is numbers. Numbers, what we mean by numbers is the price. If you bought the stock at 20, now it is 19, the market tells you you begin to lose money. So whatever you want to do, the market tells you that you are in bad situation. Either you exit or you continue. Okay? So this is just a warning. A warning comes with a red number, because this is a good thing when you almost all the brokers use red and green. All the brokers, most of them. Okay? So I see some charts when they use white and black for the chart. For me, I don't use that. For me, I use the red and the green. Like when you are driving, the green, it means continue, and red, it asks you to stop because you begin to lose money, which is very, very simple. Hello, Rahmatullah Modi, how are you? So, as I told you, the market is always there to tell you the truth, and it gives you the price. And when you go to your broker, you will see two things. Either you are in green or you are in red. If you are in green, it means you are making money. It means that some of your trades are doing good. You should continue with that. And it will give you other stocks that are in red. And be careful. You should see how much you lost always. And then if you put stop loss, you will exit that trade with that loss. But the real idea is if you don't control your trade, the loss will be bigger and bigger and bigger. For example, you buy 500 shares of a stock that it is $20. Okay? 500 shares, the stock is $20. You spend $10,000. Now, if you lose $1, you lost $500. So, $500, but if you stay more, another dollar, it will be 1,000. It will be 10% of your money. If you stay more, it can go up and up and up and up in loss. And if you don't plan your trade, what will happen to you? You can't decide, and this is a sickness. It's a very large weakness. It means you are weak. You can't control anything, and you are just throwing your money to the market. Okay? And that's a big thing. Gnanu Shreyas said, sir, explain about penny stocks. Now, penny stocks, we have two kinds of penny stocks. I have explained many times, but this guy, Shreyas, because he's new, so I will just give you an idea about two kinds of stocks. So let's go to the explanation. Now, so here I will give you two kinds of stocks. One stock, second stock. There is one stock that goes into a trend like this. Now, it was $1, for example. Now it is $5. And it goes here, let's say, 2 months. This penny stock is normal. It means it's going up normally. And you see here it was $1, 2 months. So it's a long time. And it's going up, going up, going up. It can continue up. This is normal. Now, there is another stock that it is like this. Okay? So I will make it like this. Now this stock, for example, it was $1. Okay, it was $1, the same as this. Here it is $1 at the end, but it goes here to $5 in 1 day. So, and then it goes down, let's say to $2, $3.50, and then it goes back to $1. Now this stock is called pump and dump scheme. Pump and dump scheme stock. What does it mean? It means there is manipulation. Manipulation. Manipulation, it means someone has pushed this stock from here to here because there is manipulation. There is what we call pump and dump. It means they pump the stock and they dump it again. And this is very dangerous. These stocks are very dangerous stocks. And these ones are normal stocks. Now, for me, I am doing this kind of stocks. I follow trend. I don't do this. This because you will never know when. And here you can do this by doing day trading. Okay? You can do day trading here. Whenever you see a stock in the morning is going up, not normal, by the volume. Let's say the volume here was 50K, but in this day here, in this day, you will see 15 million. So how come a stock is always trading 50K, 50,000? It goes in 1 day 15 million. It means that this stock is manipulated. But this stock, for example, it is trading, let's say 500K each day. So it will continue nearly the same. 800, 1 million, 700, 850. It means it's always trading normally, sometimes up, sometimes down, but it's normal thing. And this what we are looking for. Now, if you want this kind of stocks, you should be a day trader. Okay, here we are doing swing trading. It means following the trend. Okay, so hope this explanation will just explain to you one kind of or two kinds of penny stock. And then if you have more questions, you can ask more questions. So hope Gnano Shreyas, you get an idea about penny stocks and understand that penny stocks, you are obliged to trade them if you have no money. Welcome Gnano Shreyas. You are obliged to go to them because you don't have money. Let's say you have $1,000 or $2,000. Okay? So you will be obliged to trade this kind of stocks because you don't have money to buy stocks that are $50, $700, or $100, $200. Okay? So that's the problem. Go Ahak, how are you? It's a long time I haven't seen you, man. Hi Kareem, if I choose golden subscription, I get 13 trades in first month or after many months. Oh no. Go Ahak, you get them directly. And you can stay as much as you like, and then if you want to cancel at any day or any month, you can cancel at any time. But understand, this is what I know and this is what other people. Most of the people who do like 1 month or 2, you can't watch hundreds of videos of training. Okay, you can't watch them. And in golden subscription, I do the weekly search. I give you sometimes lessons. If there is something happening in the market, sometimes I do lessons like this. It means, and you can ask any question about the market. I make videos. So golden subscription is for my real students who are following me for many months or many years. It means they follow what I am doing. They follow if there is something, I give it to them. If there is something new, whatever happens in the market. Let's say about 1 month ago, I explained to them how to buy stocks, training level 13 from the support line, where to find this kind of stocks, how to search for industries. All these are real things. And they follow and they check. And but in golden subscription, you are free. Now, if you want to have the training forever, you can order them separately without doing the subscription. So it's up to you. Okay, so you can do whatever you want. But everything is available when you get the golden subscription. You find the 13 training there, and you find hundreds of lessons and training. Okay, you find hundreds. You find questions of the students. You find the stocks. You find the searches that you have done before. So it is a lot of work. Okay, a lot of work, especially in these 3 months or 4 months where there is the correction. A lot of people, they need real help. What to do in this situation? What kind of stocks to buy? Which industries? We try to do as much as we can, and I explain as much as I can. And believe me, in 1 month ago or 2 months, I have explained how to buy stocks. Most of my students, if they have followed my instructions, they would have made money for sure, because all the stocks that were down, they were up right now in 1 month or 2 or 3. So they should be making money if they follow the instructions. This is how things. We explain things on the moment. I'm not explaining something last year. Oh, I say last year, if you have bought that stock last year, you will have made this. No, I will tell you now. But the reason is, I will not show you examples because you think that I know the future. For me, I don't know the future. When I buy stock according to my criteria, I put stop loss. If the stock goes and I am right, I will stay. But if the stock doesn't follow the criteria and falls down, I will just exit and leave it. Okay? So this is normally how things work, because buying and selling stocks should be a continuous thing. You don't buy and sell except when you have winners. For example, let's say you have 4 or 5 or 6 stocks. There are 2 or 3 that are excellent. They are making money and they are going good. Why you exit? Is there a reason to exit a trade? And you say, for example, oh, I have made money. No, you will make more. So I give you the reasons when to exit a trade with a profit. When. But still, if you are wrong, you can enter again and you can follow the trend. I have explained this many times ago. And I always explain it and re-explain it, because these things needs to emphasize and to focus on always, because this is a strategy. Strategy, it is not to buy and sell and that's it. No, You can buy the same stock and then you sell it after 1 month or 2, and then you can buy it again. Because if this stock meets the criteria, you buy it again and you will be making more money from it. Okay? So it's not a one thing, either white or black, right or wrong. No, there are things that you should understand in my strategies that makes it easier for you to follow your stocks and to make money from all of them, except for the real losers. And I have explained, I think last week, what are the real, in a video, what are the real winner and what is the real loser. It means you test and test and test until you are sure the stock is a real winner or a real loser. Hello, G. Parker, how are you? Ah, yes. G. Parker said, just buy and hold. Popping in and out will kill you in fees. No, G. Parker, we are following trends. In general, no one knows when the trend will finish. It could be weeks, it could be 2 months, 6 months, 8 months, 9 months. No one knows. So if you are a winner and it's looking good, it's doing good, you just leave it to make more money. But we have certain criteria. When the stock is not behaving well, we put the exit point and then we exit the trade. If it begins to do something bad, and then we can enter again if things become better. And this is what I do always. And for me, as I told you many times, that I have a list that I check each time. Stocks that I like. When there is a big move, I will be there. And I am almost sure to make money from these kind of stocks. Now, I'm not telling you that I buy, I make money. No. But I follow my criteria, follow my my strategy, and I will just wait and see. Hello, Cheaper, how are you? I haven't seen you from last week. Hope everything is good for you. Okay. Cheaper said, one who buys and holds is not a trader. How is that, Cheaper? Maybe you get confused about holding more than 1 year. I'm telling you the difference right now. Okay? So let's give you an explanation. So from day 1 to here, to 1 year, all this here is called trading. Now, if you go more from 1, okay, 2, 3, this is called position trading. Position trading is like this. From day 1, you stay until 3 years. All this is trading also. Plus we have some investing. It's called position trading. Now, if you buy from 1 forever, forever here, this is investing. Okay? Now, if you ask me the question, what's the difference between A, trading, B, position trading, C, investing? Trading is based on price. It's based on price. It means it's what we call technical analysis. It means you should see the chart to make decisions to buy. This is trading. Now, position trading is you use trading and you use investing. It means you know something about the company. It means your search. You know something about the company. And you make a decision to buy this company to stay 1 year to 3 years and see if you get results. Okay? Let's say, just to give you an example, let's say a company was doing not good, and then we have a new CEO that is one of the best managers in other companies, and he comes to run this company. Now you take this information as this CEO is good. You think that the company will be better in 3 years. So this is called position trading, because you are trading by the price. Plus, you are using some kind of investing. It means because you stay more than 1 year. When we stay more than 1 year, it is called investing. But since it is just for a short term, from 1 year to 3 years, this is called trading or position trading. Now, investing is when you buy and you hold forever, or 5 years, or like Warren Buffett said, you want to stay more than 20 years. 20 years. It means you know really that this company will do good. That's why Warren Buffett, for example, he buys a lot of companies and he stays 60 years, 70 years, 20 years, like Coca-Cola, like Geico Insurance. Geico, okay? So he bought these companies forever. So this is the difference. Now, when you say buy and hold, now hold, what does it mean? Hold, you don't know. It's just a general word. Do you hold this stock for 1 minute, or 1 day, or 1 year, or forever? This is you should specify what do you mean by hold. But most of the time, when we say hold, we mean many years. But this is not true in trading. Okay? So this is in general what we mean by hold. This is just an explanation for you guys to get the idea and the difference between investor and the trader. At least you have an idea. If you are going to, in the future, if you are going to do something, you should understand. Hello, Clown with Twitter account. How are you? And thank you for coming. How to ride counter trend? What do you mean by counter trend first? It means when the trend reverses, you just reverse whatever you want to do. new CEO, Chipper, said in Snap, what do you think of Snap as a position trade? Now, Chipper, first, you should see this company if she can make money in the future. This is what we call earnings. Now, if you want to take a position trade, for example, you buy and you leave for 3 years. Now, what if the stock, after 1 month or two, it's going down? It's going down and down and down and down. Are you going to stay 3 years and then you decide? It could be 1 year. The stock goes from $10, it can go to $1, right? Are you going to do this? Because understand something very important, Chipper. Understand that the people, they try to invest in something that makes the money now. Okay? This company is strong. And they think that the stock will go up and up and up because of the strength of this company or because of the competition. But companies that are very, very small, like Snapchat, if you want to risk money on investing on it, it's your choice. But understand that for me, I have one typical rule. Okay? If I buy a stock and it is against me, I will sell it. No, I'm speaking about the beginning. So I will just explain this in order you guys, you get the idea of this thing. This is a rule that I apply in whatever stock I have. Okay? Let's say. Now, my rule, all stocks, no exception, all stocks, no exception. I don't give exceptions. Okay? No exceptions. Now, what is this rule? The rule is, check this line in the chart. I bought a stock $43. I put stop loss. This is stop loss. It means where I exit. And this is the buy. Now, let's say the stop, just an example, okay? It is 40, just an example, okay? So, how much money I am risking in this trade or in this investment? My risk is $300 for each 100 shares I bought. It means, let's say you bought 500 shares. So by 5, okay, you are risking 1,500. And so on. It means you should calculate this. Now, here is the rule. Since I put my risk, which is so important in any trade, this is my risk. If the stock goes up a little bit and then it goes down and it hits my stop loss, now I am out. This is the rule. I am out. Because this stock has reached my risk. I can't go over my risk because I calculated. Now, what if the stock continues to go up? Here, I hold. This is the rule 2. Rule number 1. Rule number 2. And this rule number 1, rule number 2 are for all my stocks, no exceptions. I don't play with risk. So if you apply these rules, these 2 rules in your trading will become better and better and better. Okay? So these are just... Now, a new CEO for Snapchat. Now, when I say, when I give the example, a new CEO or new president for this company, it is just an idea. It doesn't mean that whenever there is a new CEO, it means the company will be doing good. Sometimes a new CEO, the company will collapse. Okay? Yes. Thank you very much, Cheaper and Duna. Now, when we say rules, these rules, I apply them since 2010. And I have no problem with any stock. Because if the stock comes back again and I want to buy it, I will buy it again. With the same rules. And I give the stock another chance. If in the second chance the stock is doing good, I will be making money. And making the money is the goal of any trader and investor. Now, for investing, you can seek another thing. Because in stock market, we have 2 things that you should make sure you understand. I will just now, after drinking some coffee, as you know, if I don't drink coffee, I will sleep. And you will find me sleeping in the session. So let's drink some coffee and I will explain to you 2 important things of what you get from a stock. A lot of people, they don't understand how do they behave to these 2 kinds of profit. We have 2 kinds of profit of a stock. I will show you right now. Let me drink some coffee. It's good, this coffee. So let's go to the explanation. Okay. Now, so we have 2 profits of a stock. Okay? Now, in order to explain to you this kind of profits, let's say you bought a stock in 2010. Now we are in 2018. So this here is 8 years. Now, these two kind of profits of a stock, let's say a stock is $100 price. Now, in 2018, just an example, okay? It goes to $800. This is just an example, okay? So, here, the first profit, this kind of profit is the profit of a price appreciation. Okay? Price appreciation, it means from 100 to 800, so you have a profit of $700 for each share you bought. Whatever shares you bought, 1 share or 100 or 1,000 or 10,000, it doesn't matter. This is called, the first kind of profits is price appreciation. Now, there is a second profit that investors are looking for. What is it? It is called the dividend. Now, let's say a dividend, they give you 5% each year. Now, let's say 5% of 100. So we just give the one example. Okay. So let's say 5% is $5. Multiply by 8. You will have $45. Okay. Now, so $5 you multiply by 100. Okay, so you are getting $4,500 in this 8 years. Now, it's not exactly, it could be more and more and more, because 5% is $5. But when the stock, let's say it goes to 200 next year, for example, 5%, it could be $10, right? So we are not going to calculate this exactly, but let's say we give $4,500, and let's go for all these years, and let's say we have 10,000. Let's say we calculate everything by calculations of percentage, and let's say we get $10,000 in these 8 years. Now, $10,000 is the dividend. So this is what the investors are looking for. So investors are looking for dividend and price appreciation. So two kinds of profits. Because when you get the dividend, you don't sell shares. But understand that there are stocks with dividend, and there are stocks without dividend. Okay? Now, if a stock has no dividend, I give you an example. Facebook. Facebook has no dividend. It means even Facebook, it goes from 100, it goes to $800. It will give you no dividend. So this $10,000, you don't get it. But if a stock with a dividend like Apple, just an example, okay? I'm not asking you to buy a Facebook or Apple. No, I'm just giving you an example. Apple has a dividend. So if you buy, for example, Apple, you will get price appreciation and you will get the dividend. So if you want to be an investor, before you invest, you should think about dividend or not dividend. But this is just something that you should think of in the future. Because understand that, let's say you have a lot of money, so dividend could be a good thing. But understand, in general, dividend stocks, they move slower. In general, okay? This is not a rule. This is not a general thing. Because the dividend, when it is taken from the price, it makes the stock slow. Stocks without dividend, they go faster. In general, okay? In general. Because this is not a rule. It's just a general thing about the market. So when you want to invest for the long run, you should understand these things before you make any decision. And I'm telling you other things. That there are some kinds of stocks that you pay more tax for the dividend than other stocks. So this, you should need to dig into it. Okay? So understand always that in this life of investment, you should always think and have knowledge before you do an investment. Because some people, old people, for example, I give you an example of an old person. Now, this doesn't mean, I'm speaking, let's say, in general, okay? Let's say, I'm not saying he will be, let's say this guy from 18 years, okay? He was 18 years. Now he is 60. Now, 42 years he is working. Let's say he has a good job. Let's say he has a good job. Let's say he has $1 million in his investment account. Either it is 401k or it is his own account or whatever. But by the age 60, now, $1 million, if we have, let's say, stocks that give 5%, he will get $50,000 a year plus his Social Security money, okay? Whatever is this Social Security, let's say it is $30,000 per year, he is getting $80,000 a year. Okay? Now, those people who don't invest, okay? Let's say another guy who didn't study, he didn't have a good job, he has no business, and he is 60 years, and then he is only Social Security. So he will stay poor as he was before. It means all his life he did not think about his future. So this is just an example of those people who save money, invest in the future, and those who don't. Those who don't are always in bad situation. Because if you have 1 million or 500,000 or whatever, okay, and you have dividend from stocks, you can easily, okay, you can easily make money from your dividend. But don't think about, as some people think, that you think about dividend stocks. Let's say you have 10,000 and you are 60 years old. You are 60 years old and you have 10,000 and you are thinking about 5%, which is $500 a year. This is not really what we are thinking about dividend. Dividend, you should have money. In your life, you should not stay until you are 60 years until to have this $10,000. So you should think early. And this thing that I am saying here is not taught in our schools. It means the school that the people or the students or the pupils are going to, they don't teach them how to invest or how to save money, especially investment. And people, they get 18 years old, they go to university, study, but they have no idea about investing. And this is a real problem for them. Okay? So I was okay? So what I have all explained is just in general, if you begin early, okay, and you invest, if you are thinking about dividend, because a dividend is something that it is for big accounts. It's not for this big account. It should be in years investment. Okay, years investment. It's not a dividend for 10,000 or this will not help you that much. Okay, so those people who are looking for what we call investing, they should think about this. Thank you, Donna. Thank you, Cheaper. Thank you, Clown with Twitter account, for all your questions. So, Clown with Twitter account, you say how to ride counter trend. If you mean by reverse, if the trend is going up and it stops going down, either you can short the stock or you can buy a put. That's the two ways you can do counter trend. It means when the trend reverses. Robert Polo said, it would be nice to have step-by-step program which gives all the steps in chronological order from step 1 to step Z, including the timetable projection of how long it takes to grow the account. Now, Robert Polo, to grow the account, you should think about, are you a trader or are you an investor? In investment, you should search for companies. And then, let's say you find 4 or 5 or 6 companies. And you begin to save money and buy shares. If your investment is growing up, you should save money and put money more and more and more and more. That is the best thing you can do. If 1 year, 2 years, 3 years, one investment is bad and it is taking your money and you are losing money, you cut it off and you replace it by another company. This is how all the investors do. Because you get the average of all stocks. But if you are thinking that you have $10,000 and you don't save more money for it, here you are wrong. Because it's better, because investing is something that it goes each year. There are some people who put 10%. I have taught a student who put 20% of his money. He has a good job. He is putting 20%. Do you understand what does mean 20%? Now, his account will become quicker, bigger than someone who put $500 a year. So when you say step-by-step chronological order, yes, but it's not for all the people. Someone who saves $10 or $20 a paycheck is not someone who can put $1,000 or $2,000 in a paycheck. They can't go together. And Robert Polo, these things you should either study yourself or you should learn it from someone. But this information is not for free. Because, for example, what is the job of the financial advisor? What does he do to you? He just tells you how much you can put, what is your risk. It means, what do you want? Do you want something which is risky, or do you want something that it is not risky? What do you want? Because your decisions, it is yours. If you don't have money, or you have very little money, your account will be struggling. It will not be going very good. That's why the people who go to a financial advisor, it means they are scared of the market, they have a lot of money, and they go to him, and he will get paid to do that job, which is what you see, a step by step from A to Z. He will explain to you what's going on, but he will not guarantee anything. Because the market, no one will guarantee the market. So, okay? This is what I told you, Robert Polo. There are a lot of things you should learn, because sometimes you choose a company, okay, and those kind of companies are taxed more than other kind of companies. For example, for dividend. So this thing you should learn, you should study, and it is not, most of the time, it's not for free. You should dig into it by yourself, or let someone teach you the steps, step by step, until you understand what you are doing. Clown with trader account. How to know that the stock is strong technically? Now, strong, it means two things. Either it is going so fast, or it is going slowly, but for a long time. I will give you an example. Cloud with Twitter account. And this we always have them in trading. So let's explain. Now, this is a stock that you bought, $20. It goes to 23, 25, 28, 30. So this is a strong stock. It means this stock in few days it has done 50%. It means if you put $10,000 in this stock, buying 500 shares, you are getting $5,000 in, let's say, 1, 2, 3, 4 days, or 5 days. You get not 5. You get $10,000. Oh no, $10,000 is 20 to 30 is 50%. So you are getting $5,000. Okay, 50%. So if you put $10,000, after 4 or 5 days, it becomes $15,000, and you see that you have made in your account 50% in few days. This is a very strong stock. It means it moves fast. Okay? Now my techniques are searching for this kind of stocks. Now, the second thing I can tell you is that there are some stocks that it goes from 20 to 30, let's say in 2 months. You get also a 50%, but in 2 months. Okay? This is a consistent stock. It means it grows not that fast, but it's consistent. It means you are making money consistently when you are choosing like these stocks. And you will never know how much you get in how much time. Okay? Now, according to my experience, stocks who move fast in few days are the best. But sometimes we have the earning days or earning dates. When you buy a stock and then we have a gap up. These are so fast because the next day, you buy today, the next day you will see the result. But this is very risky. Okay? It's very risky stocks. So when I say strong, most of the time I'm speaking about fast in moving. And that's why I buy whatever stock. But the future of it is no one is knowing when these things happen. Okay? So hope Clown with Twitter account, you get an idea about this. Robert Paulo said, cross resistor line to clown. I don't understand what do you mean by clown. Do you mean down? And what do you mean by cross resistor line? I have no idea about what you are talking about. But in general, you say the timetable projection of how long it takes to grow the account. You will never know. The only thing that makes the account go bigger is when you save more, because in your account, the profits or the loss, you will never know how much you get or how much you lose. But when you save more, your account will be bigger and bigger and bigger. And if there is a move, it will be making a lot of money. Here we have Aisha Qudus. She says, can I ask a question? Yes. No, just ask a question without you ask for permission. Here we are in a live session. You can ask any question that you want. It's about stop loss. Yes? So what is your question about stop loss? Understand, Aisha, stop loss is tricky. I have a training for it. There are many variables that enter to calculate stop loss. Stop loss, it is not just how can someone calculate a stop loss? Now, Aisha, in a way that you don't lose too much. Okay. It's you that you decide how much you want to give as a stop loss. But there are rules that you should apply on the stock. The first rule is, you see the stock is moving fast or slow. The second rule is can you afford to do that stop loss? Some stocks need a large stop loss. Some stocks need a very tight stop loss, not very big one. It all depends on you. But there are rules. Now these rules, it is a training that I have. It is called training level 6. So if you are interested, Aisha Qudus, you can just get golden subscription. You have 13 training levels. It means how to search for stocks, how to put stop loss, how to follow the trend, how to follow the stock, how to manage your account. All the training that you need for short-term trading, or what we call swing trading. So if you are interested, either you can order training levels by level. Level 1 is free. So I give you the website. You can check my website for the training level 1. It's for free. You study it. If you like it, you can go and check. For example, stop loss is training level 6. Training level 6, it is how, because you are interested so much about this, it shows you how to make the stop loss. Because, thank you very much, and understand that when you are practicing, you can ask me questions about a stock that you bought and you put stop loss, and I will evaluate and I will tell you what is good, what is wrong, until you succeed. Especially when you do a golden subscription, because golden subscription, okay, go to subscription. You have 13 training levels for free. It means you can begin studying from the training level 1 until training level 13, and it is too much information. You need time because we have hundreds of videos explaining everything from the beginning. Okay? And I understand, Aisha, are you trading? Are you here in USA trading USA stocks, or are you in another country? Because I see your name, Aisha Qudus. Are you Egyptian? Now, another question from Zahid Dawood. What are definite signs of accumulation of stocks, and how long you should hold for? You say, no, I am not Egyptian. I am from London, UK. But your name is Arabic name. That's why I say maybe you are Egyptian or Syrian or Lebanese or whatever. No problem. So, what are definite signs of accumulation of stocks? First, Zahid. Oh, you are from Bangladesh. Welcome. Welcome, Aisha. And I have some friends here in USA. They are from Bangladesh, from Pakistan, from India, from all the countries. And I have a lot of students there. Now, what are the definite signs of accumulation of stocks, and how long you should hold for? First, what do you mean by sign of accumulation of stocks? And you hold what? Can you formulate the question elsewhere? Because I don't understand what you mean by accumulation of stocks and you are holding them. What does it mean? It means the stocks are not doing anything and then you hold the stock for more time to see what it does? Like the Dow Jones, going up and down, but they don't do anything like a trend? Do you mean that? So for me, no, see, Zahid Dawood, but I don't understand, Zahid, I don't understand, what do you mean by how long in time, 1 week or 1 month? What do you mean by one month? When bigger guys begin to buy, they buy for 4 months, 6 months, 1 year. They buy, they continue to buy. That's why we have trend. If they don't buy that much, the market will not go and the trend will not continue. So accumulation, as you maybe you have seen, it means that this people, when they say accumulation, it means the stocks are not doing that much. They don't know the direction. Some people are buying, some people are selling. Now, when there is big guys, it means the trend will begin. I will tell you, Dawood, how things work. So let's go to the chart. Now, look at this. Look at this. Now, what do you see here? This is the trend for the Dow Jones. It means the 30 biggest stocks in USA. They have been going up for 1 year and 7 months. This is 1 year and 7 months. It means the big guys are buying. That's why the trend continues to go up. Now, what did happen here? At the end of January, before it, I spoke about correction. In Saturday, I speak here. What's this? This is Friday. If you go on the 27th January, you will find my live session like this one I'm speaking. And I said that solutions for a crash or correction. At that time here, no one believes that next week will be a crash in the market. Okay? Now, here the big guys are selling. All this is called accumulation, but accumulation, what does it mean? It means that the people are buying and selling, buying and selling. There is no big guys working here. This is the big guys, what they do. Here they sell. Now, here the market is trending into a range. It means no trend is seen. If the big guys are buying, it should be either going down, crossing this support line, or crossing the resistance line. This is where the big guys begin to buy, either from the bottom, going up, or going down and crossing this line here, which is called support line. So this here, it is what we call accumulation, but it doesn't mean that the stock will go up or go down. You ask me, how long? We have been in the accumulation here, in this correction, since 29 January. So February, March, April, May, we are in 4 months, and we will never know where this will change. So no one knows when the big guys will move, because now what they are doing, they are selling some industries and buying others. When they sell everything and they buy and they begin to buy, you will begin to see a trend like this. Do you see here how good it is? Do you see here how ugly it is? This is called accumulation, and this is called an uptrend. So we are waiting for the market either to go up or to go down. That is what I try to explain to you, and hope it is understood by now. Thank you, Zahid, for your question. Andy, how are you, Andy? It's a long time. I haven't seen you. Okay? So, everything, well, when you see the indexes like Dow Jones or S&P 500 or Russell 2000, these are general things about what the market is doing in those stocks. But it doesn't mean that those stocks are all doing good or doing bad. If the market is into a trend which we call a bull market, most of the stocks are going up. Most of them, but not all of them. Okay? Now, if we are in a time of accumulation or what we call correction, all the stocks, some are bought, some are sold, so there is no real direction of the stock. Okay? So there are techniques that you should see each industry what it is doing, and this is what I teach, is to look at the best stocks right now by doing stock screener, which is training level 2, how to search for stocks using stock screener. If you want to know now what are all the stocks that move, you should do that training. Andy, he said, I don't know when you will be live. See, Andy, most of the time I do on Saturday at 11 p.m. It's most of the time. Or I send Okay, Andy? Most of the time, it's Saturday, 11 p.m. Eastern time. This is always. I have it the whole. Now we are in training live stream 63. But last week, I have done some live just because I want to change from a video to a live. But I didn't announce it. So, Andy, you can send me an email if you want to. Okay, you can send me an email if you are if you don't know if Saturday we have or we don't. But most of the time I have, except for some exceptions. Andy, stop sending me money. It's too much. Thank you very much, Andy. And understand, Andy, that I have a golden subscription, and the people are following me when I do a search, a weekly search on Friday. I do lessons. I explain to them what's going in the market, industries, sectors, and they ask me questions. I make videos. That's why those they get like all what I know, and they share their trades. They tell me if they are right or wrong, when they put stop loss, when the trade is good, when the trade is bad, and they ask me questions, and I make videos for them. But Andy, thank you very much for sending the money. Thank you very much, and I appreciate it. So I thought it was like $1,990,000. If I got that, I will always on Monday I'll buy all the stocks that I need right now, because I see a lot of opportunities. Thank you very much, Andy. Thank you very much. Now, as I told you, as I told you, for me, I always see stocks. It's daily. The problem is that you don't have money to buy everything in the market, because each day we have stocks. But the good ones are the stocks that they stay longer. They stay days, weeks, 2 months, 3 months, 6 months. These are the best stocks because you can get a lot of money from them. And this is the true money. It means it is the jackpot. It means you follow stocks for months and you get the whole trend money. It's not as one of my students, he just began to trade. He bought the stock 2 days ago. The stock is going up, and then he said, and he was so happy, he sent me the trades, and I asked him the question, okay, you bought the stock good with the criteria, the stock is going up, which is very good. My question to you, why you sell the stock? What is the reason? Did you follow training level 7, how to follow the trend, and you find the reason, and then you exit? No, he told me in the day, I see that the stock is doing good, then at the end of the day, it's going down, so I decided to sell in order to make my profit. After a few days, this stock is going 10 or 20 or 30% more. So I told him, you get $200 or $300, but in the market, it should give you $1,500 or $2,000 or more. But you don't want money. That's why you exit early. And for me, my teaching is to teach you how to be patient in order to get the money. The money accumulates during the time. If the stock is going up, I'm not saying when you are losing money, you stay. When we lose money, we don't stay. We put stop loss, we exit. Because the market is taking our money. We don't want the market taking our money. We want the market to reward us and to give us money. Okay? So that's the good thing I am always explaining. And that's why always I speak about opportunities in the market. And I say always, opportunities are there. The market is always having opportunities. But for the stock, there is days where you should buy. If you wait too long, you can enter and you can make money, but it is not as we wish. For us, we want to get almost the whole trend. I'm not saying to get 100% of it, but to get a high percentage of the trend. And this is what we are doing. Andy said, I watched some of your videos about stocks versus options. Since I am new and doing regular stock trading, how long should I wait to start option trading? Now, in option trading, try to begin with small money. Let's say if you want to begin with $100 in a trade, you buy one contract or two contracts, depending on the stock. Stay low. Now, why I tell you to stay low? Because options, when you put that money, it is 100% risk. Do you understand? So, I will give you an example to understand this. So let's give you an example. Now, let's say you put $1,000, you buy 10 calls contracts. Now each contract, each one is $100. This is one contract, and you bought 10. Now $1,000. Now let's say the stock is 20. Tomorrow it goes to 15 because there is a gap down. Now, what will happen to this $1,000? 10 contracts. It doesn't exist anymore. It is zero because this price, the strike, let's say it is $20. This is the strike. If you go to the chain, in options, the chain, you will never find the $20. $20 is zero because it lost its value. It lost its value. Now it is zero. So you have lost $1,000 in one day. Okay? So if you want to begin studying options, try to buy, for example, $100. Let's say 2 contracts of a small stock, $100, or you can do $50, and you try to study options. Now you can see training level 14 in my thing, and you can study it. This is for beginners. It will give you more information about how to do calls and puts with, and you begin small, but understand, don't do crazy trades. You put, for example, $10,000 or $5,000 and you say, let's gamble. Understand that if you put too much money, any movement about options, you will lose a lot of money. You can make money, but understand that when you lose everything. Because you buy time and you buy the premium. Okay, you buy time and the premium. In stocks, we don't buy time. It means in stocks, if you buy a stock at $20, you stay 1 year, you don't pay nothing. But in options, you buy time. Buy 15 days or 1 month or 2 months or 6 months. The more you stay, the more you pay. So it's like renting these options. So my suggestion, if you want to do options, try to stay low and don't risk too much money. So this is my my suggestion, and you can do whatever you want. Cheaper said, if we sell an option, time is our friend. No. Time has nothing to do with you. Time, it can be against you or with you. Because when you sell an option, it means, you sell a covered call, right? Or a covered put. If you sell an option, you get the premium. Let's say $100, $200, $300. But the time, you will never know what the stock will be doing. What if the stock is going against you? It might be it goes to your premium and then it goes more and you lose capital. That's why the guy who buys a call or a put, he just have the premium as a risk. He doesn't risk more. Whatever happens in the stock. Now, but let's say you sell a covered call for 6 months and you get $1,000 as a premium. You get it right now. But how do you know what will happen in 6 months? Maybe the stock is going up and the other guy, he will make $2,000, $3,000, $6,000 from your stock, and you only make $1,000. Now, let's say the stock is going down. He lost his $1,000 in 6 months, but you can lose $2,000, $3,000, $4,000. So time is not your friend, really. The direction of the stock is your friend or not. So that's yes, it's what we call the decay, theta, which is the decay. It means when the time you lose time, it's not you lose time, but you can lose price also. You lose price of the stock because when you sell something, you sell it on the strike. But if this strike, the stock is going opposite it, you might lose a lot of money. Okay? So, if you are going to do options, you should study it. You should take years in order to understand everything about options, and then you specialize in options. Okay? If you want to specialize in stocks, the risk is known. Yes, in stocks, it's the easiest thing in the stock market because it is not leveraged. You don't use margin. It is not leveraged. Leveraged, it means that your profit is magnified and your loss is magnified. This is options, forex, options, forex, and futures. These three are magnified derivatives. It means with small money, you control big money. But understand that the loss also will be magnified. That's why it should be for people, for advanced people with high risk in order to do that. Yes, Andy, you say it is confusing as hell. No, it's not confusing because you don't study it. Now you should study it to understand options because it is not the same as stocks. It is not a stock made $1, you get $1. No, it's not the same. And if the stock is losing $1, your options is losing $1. No, it is other calculations. Okay, other calculations. So if you want to study, you just begin with the beginning and study it. So it is really, it's really not like stocks. Stocks are easier because they are simple to understand in terms of price. A stock goes up $1, you will make $1 for true. If you lose $1, you will lose $1 for true. There is no magic in that. It's very simple. That's why you find that options are cheap. Okay? They are cheap. But because they are cheap, it doesn't mean that you will be making a lot of money and you are not risking a lot of money. So you are risking a lot of money, which is 100% of your money. That's why some people who go to options and they have no idea what they are doing, so what will happen to them? They wipe out their account. That's why there are a lot of brokers right now. They are doing a lot of advertisement about binary options. You always bet on all your money. You put $200, you bet on them. You can make $50, you can make $100. It's okay, it's okay. But you can lose all your money in a few hours, in 1 day or two. You lose all your money that you put, which is so bad. And this is something which is very, very dangerous. So Andy, as I told you, you can check training level 14, how to buy a call and put options, or how to trade call and put options. You get the basics and you will get just the calculations, and it's very good for you to begin with that, and then you can continue. You will, but understand that calculations are not the same. Are not the same because you put little money. You put a little money. That's why you are not putting too much money. But if you put 5,000 or 10,000 and buy contracts, understand that if If you make money, you will see big money. 20%, 30%, 50%, 100%, you will see real money. But the problem is that when you have a bad trade, all your money can be wiped out. That is the dangerous thing about options. Okay? So, Andy, you can check, for example, currency pairs or futures, which is better in price. It is risky, yes, but the calculations is very simple. Calculations is very simple. Currency pairs and futures. It means when you see the price, you buy whatever pips you see, you get the money, you lose, or you make money. But in options, no. The calculations are very difficult. And what they give you, you accept. Because it is not you who does the calculation. It's them. And the calculations are done based on many things. That's why it is so hard. Okay? It is so hard. So, as I told you, that in stocks, there are some stocks that trend for many months. And when it is the beginning of a stock, most of the people or beginners, they don't buy it because they don't see the trend. But thank you very much, Andy. Thank you very much and welcome as always. And when the trend is so big, all the people want to buy that stock because the analysts will speak about it, the media will speak about it, people in chat rooms, they speak about it, Facebook groups, wherever you go, Twitter, all they speak about stocks like this. But unfortunately, it's at the end. Now for us, we try to buy from the beginning in order to make money. We are not going to buy at the end as people do. As you can see, for example, we have spoken about Dow Jones just yesterday. I made a video. You see that we are still trading into a range. It means the stocks go up, stocks go down. This is the average. But understand that not all the stocks are the same in the same index. Okay? If you go, for example, to Dow Jones, which is 30 stocks, you will find that some stocks are doing better than the index. Some stocks are doing the same, and few stocks are doing bad. Now, what does it mean doing bad? It means mutual funds are selling those stocks. That's why they go down. Because understand that to move a stock, we need big guys and we need a lot of news to make these stocks move up or down. If the mutual funds are selling, short sellers, they begin to sell short daily these stocks. That's why when they go down so bad. Okay? Now, mutual funds, when they begin to buy, they need the help of the public. But people, they discover these stocks by searching. There are 24,000 mutual funds, ETFs and stocks and IPOs. It means new companies. Each week, each month, we have new companies that they go into the stock market. So our stock market is becoming bigger and bigger and bigger. Okay? So opportunities to make money will go forever. The only thing you do is when you search for stocks, you find a winner, a stock that goes up, and you are right, you just hold for it for whatever time until you make money. If the stock continues to go up. But if the stock, you are mistaken in the stock, so this stock will go down. Okay, and it has no trend, because what we are looking for are stocks that can trend for a long time, but we don't know if they go that far or no. So you ask me the question, how do we know? The thing that we know is you should buy the stock. You should risk some money. That's why some people who risk their money, they can find this kind of stocks. Some people who are waiting for someone to tell them this is the winner, this you will never make money like this. So the whole market is based on people who take risk. Okay? Because how do you know? Are you going to stay 2 months or 6 months until you see the stock is going good and it has a trend and then you enter? So you are late. At any time the stock can go down and you lose money. So the only thing you do is you search well with criteria, you search for the best chart, you see strong stocks and you buy them. You wait. If the stocks go up, it means that you are right and you can continue holding them. If the stocks are going down, you exit with a stop loss and that's it. You can put them in the list and see later if they go up again, because maybe you are mistaken on time. And this is called momentum. Momentum is to buy the exact day the stock has showed interest. Okay? And then you will see later if you are right or wrong. But there is no way to know that the stock will be good from the beginning. There is no way. The only thing to expect is to buy it on time, according to criteria. And then you will see. And maybe you say, oh, I lose money. Yes, you should risk your money and you should always lose little money in order to catch a winner. It's like fishing. Okay? It's like fishing. You throw a small bait, maybe small fish or whatever, okay, in order to catch a big fish. So you are always using a small fish, and that's it. So if you throw nothing, I don't think that you can get a big fish without that. Especially, except when it is a shark and you see it and you throw yourself and you want to catch it. This, I doubt you do that. Okay? So, this is in general for opportunities. And please, if you have more questions, please ask. Because we are into 2 hours 13 minutes. I'm trying to explain as much as I can. So if you have any other questions, there are some students and some people I didn't see today. It's strange because I always see them, but this week I see some other people and some new people, which is very good. And as I told you, I am always here, like on Saturdays at 11 p.m. And I am making videos daily, so you can still watch my videos. If you have questions, you know my email. And if you are interested just to check training level 1, you can see it always in my website. Or if you have a question, and you want to send me an email, that will be very good. You can send me an email whenever you want to ask something or you have something. Okay, so to make a conclusion to this is that always the market has opportunities, either in when the market is trending into a range, because we are still in the market trending range, but there are some stocks that have begun the trend up and down. Okay, but the fact that you don't see these stocks is just because you don't search. Okay, but some stocks you will see that they have a small trend, 1 month or 2 month trend, but this 1 month or 2 months can be 6 months, 8 months, or 10 months, and the stock will be so big. Okay, so always keep in touch, search for stocks, or you can put a list of stocks into your portfolio. Put some stocks that you like or that you have traded before, and put the lines that I showed you if you are my student, and then just follow this kind of stocks. Okay, so this is trading is so simple, but a lot of people, they think it is so difficult and confusing. But in general, if you follow my steps and my instructions, you will find that everything that I teach is so simple. Anyone can do it. It's not a big deal, because there are rules. You just follow the rules and don't break them, and you can change your account from being red to being green in the future. Okay, so I hope to see more questions before we stop this session. I know some people, they prefer just so you write FANG. Is this a stock or what? Is it a stock? No. See, the first one, I think it is wrong. I don't find it. The first one is it's a group. Well, what do you mean by it's a group? Now, you put FANG. It doesn't exist. Check it in your chart again. Check it. What do you mean by group? It should be a stock, an ETF, a mutual fund. So what is it? Oh, I see. I see what you mean. Facebook, Apple, Amazon, Netflix, Google, Yes. Yes, yes. I just see the term, which is you put it, which is Facebook and Apple and Google and Netflix and Amazon. These are the well-known and biggest in technology stocks, but there are other kind of stocks also, not just those, because those they talk too much about them. They are very, very famous. And when you say, what do you think about Facebook, Apple, Amazon, or for me, I buy stocks by price. It means by criteria. I don't invest in them. Do you understand the difference? Because there are some people, they don't care. They study the company, they know it's making money, and they know that it's big, they just buy it. They buy it for that, for investing. But for me, I don't buy stocks because they are famous. And I don't buy because it is technological stocks. Because there are other stocks that they go faster and stronger than these big ones. Okay? So the stock market is full of stocks that are unknown. So Andy, those people who invest in stocks, they see the company at first, and they see what it does, how much money it makes, how the stock moves, and they have a lot of money because Google, Amazon, they are bigger stocks. You should have money to buy them. Okay? So it's not, they are not for everybody. And even if you have a little money and you go to buy these big stocks, you are not going to make that much money as you think, because you don't have more money. The stocks are big. No, Andy, when it is $1,990,000, you can buy. But not $1.99. Yes. You can make a portfolio, but understand a stock that it is $20, it can go to $40 easily. But a stock that it is 1,000, it's difficult to go to 2,000. It's difficult because it is a big stock. Okay? And we are not explaining exceptions. Exceptions, it means 1 or 2 or 3 stocks that go like this. We are thinking about common stocks. Okay? Common stocks. That's why the people who have a lot of money, they can buy these big stocks because they have too much money. Okay? So, I think we are reaching the end of this session. And thank you very much for all of you guys who come and who participated and contributed to the chat and for the explanation. If you still have questions, you should just ask questions or send me an email. And I think it's the end of this session. Thank you very much, and see you next week.